Ryan Reynolds here from Mint Mobile. I don't know if you knew this, but anyone can get the same premium wireless for $15 a month plan that I've been enjoying. It's not just for celebrities. So do like I did and have one of your assistants switch you to Mint Mobile today. I'm told it's super easy to do at mintmobile.com/switch.
Upfront payment of $45 for 3-month plan, equivalent to $15 per month required. Intro rate first 3 months only, then full price plan options available. Taxes and fees extra. See full terms at mintmobile.com.
Reality radio for a really great future. We're talking real money.
It's that time again. It's Talking Real Money, the Daily Show. I'm Don McDonald. Thanks for listening. I really appreciate it. Today, we're going to do the same thing we did yesterday. An online question and a called-in question. If you have an online question, please send it over at talkingrealmoney.com, and I'll read those on the podcast and answer those on the podcast. If you'd prefer to call in your question, sometimes that's just easier. Anytime, 24 hours a day, you can call our question line or maybe even answer line at 855-935-TALK, 855-935-8255. Record your question. I'll answer it on the podcast. There's a third option, too, and that's calling us live when we do the live show that turns into a podcast, and we do that every Saturday from 3 until 5 p.m. Eastern or noon until 2 Pacific at 855-935-TALK. See how easy this is? You either remember that number, 855-935-8255, or you go to the website, talkingrealmoney.com. This is Memorial Day weekend coming up, so there will not be a Memorial Day podcast. I'll be back with one on Tuesday. And then I think Wednesday and Thursday will be the Saturday show played back for you, or podcasted for you. So let's see. I think we should just get started. Let's go to our first question, which came in from talkingrealmoney.com. And the question, the subject first is Vantage Point Funds in 457. Enjoy your podcast. Thank you. Well, thank you. Have a question. In my 457 retirement account, I have the option of investing in traditional Vanguard funds, S&P 500, total market, extended market, total bond, or Vantage Point Vantage Trust funds. Are you familiar with Vantage Point funds and how they operate? At first glance, they do not seem like traditional mutual funds. Dividends seem to be handled differently from traditional mutual funds. Any insights you can provide would be helpful. Well, the Vantage Point funds were created for retirement accounts. They're focused on retirement accounts. You can't get into them as a member of the public. And they go out and they hire investment managers, mutual fund managers. As a matter of fact, they say that they try to get different complementary investing approaches, but they are actively managed mutual funds, which immediately turns me off to them. And they're institutional funds, so they don't have a lot of people to pay, but their expenses are higher than the expenses in a index type product like the Vanguard Total World or the Vanguard S&P 500. As a matter of fact, their growth fund has expenses of 0.5% per year. Now, that's not usurious, but that's high for an institutional fund because it's actively managed. And again, there's no evidence that active management adds anything over time. It doesn't do you any good. So what would I do? I'd go with the Vanguard funds if this was my 457, absolutely without hesitation. I just see no benefit in paying more and probably getting the same or less over time. Best case scenario, unless they get lucky, it's going to be about the same. So why not pay less? Just seems logical. 855-935-8255. Give me a call. Love to talk with you and answer your question. Well, I won't really talk with you, but I'll answer your question. Although on Saturdays, we'll talk with you. 3 Eastern, 855-935-TALK. Let's go to our next call or our next question.
Hey, guys. It's Carl from Pennsylvania. How do you feel about the equal weighted stock indices? There are two. There's RSP, that's Rita Samuel Peter, that's equal weight of the S&P 500. And the other is EQAL, EQAL. I think that's for the broad market. How do you feel about them compared to the standard indices? Thanks. Bye-bye. Great show.
These are both Invesco exchange-traded funds, ETFs. The RSP, that's the symbol, is the Invesco Equal Weight S&P 500 fund, and the EQAL is the Invesco Russell 1000 Equal Weight Fund. What equal weighting means? Well, let me go back. Index mutual funds are almost always market capitalization weighted or market cap weighted. That means that the bigger the company, the bigger its share of the S&P 500, for example, or the Russell 1000, which is what the other one quotes. So on any given day, the biggest chunk of your money in an S&P 500 fund is going to be either in Apple or Microsoft or Amazon. It was Exxon, whatever the biggest company is in terms of capitalization, the number of shares outstanding times share price. So that gives you an overweighting towards big companies, toward the large company stocks. What an equal weight fund attempts to do is spread it around equally among all the stocks in the portfolio. They try. They don't exactly always get it right. But, for example, in the S&P 500 equal weight fund, you own about 0.25% of each of the companies in the S&P 500. And they adjust that so that that stays the same, roughly. Is there an advantage? Yeah, of course. You end up with more of the smaller companies and fewer of the larger companies. But because you have more of the smaller companies and fewer of the larger companies, you also tend to get increased volatility. And that's been borne out when you look at the performance of both of these products. Both funds have outperformed the S&P 500 or the Russell 1000. They would have made you more money in the past. No guarantees going forward. But they've also been more volatile. So it's a roundabout way, I guess, of picking up smaller company or more of the smaller companies. But we don't mind market cap weighted. We just want to make sure that you cover your bases elsewhere. And we've found, based on historical data, that when you overweight the really small cap stocks, not the mid cap or the large cap that the S&P 500 and Russell 1000 represent, but the real small ones, that you tend to get more bang for your buck, and you tend to get, or you have tended to get in the past, a slight reduction in volatility, because small company stocks and large company stocks don't move exactly in locksteps, because large company growth stocks and large company value stocks don't exactly move in lockstep. So I don't think they're bad for any particular reason. I don't see why you necessarily need them. And bear in mind, you're also paying up. When you get a Vanguard Index 500 or a Fidelity S&P 500 fund and you pay less than 10 basis points, you're paying less than half what the S&P equal weighted ETF costs. So there you get a little advantage in costs, which we believe is the only sure way to increase your yield. Less paid means more money. 855-935-TALK. That is a number that's good 24 hours a day, 7 days a week. Also good on Saturday between 3 and 5 Eastern, noon and 2 Pacific, to get questions answered. Important money questions answered. So we hope you'll call us anytime. We hope the show and the podcast help in some way. And thank you. Oh, tell friends, please. Go subscribe to the podcast. That helps. And thanks for listening. I'm Don McDonald.
Talking real money. We hope you realize advise that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately, consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestry, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. That should keep the lawyers happy.